Hello and welcome to another MCO market update on XRP. The XRP chart, on the long-term chart, is currently not affected at all by the small sell-off that we see. We are back below $2, but that does not at the moment change the overall bullish thesis for XRP. Rather, this pullback could be an opportunity for those who understand the key levels. So we will talk about those in this video. First of all, I wanted to take the opportunity to take a look at the long-term chart. We haven't really done that in a long time, and really explain the structure here. Then we can zoom in a little bit into this section here where the price is currently moving. It is important to understand that the XRP chart looks unfinished to the upside, and that is a great opportunity because the move to the upside could still extend a little higher. Actually, I would expect it to extend a little bit higher. Of course, there are levels that if they are broken to the downside, it changes the thesis. That's in any analysis. You always need levels for risk management. If you hear any analysis and the person who is presenting it doesn't give you invalidation points or levels for risk management that are that need to be broken to change the opinion, the thesis, well, then it's not real analysis. Then it's just an opinion. So you need to understand the difference. What we're tracking here is a still active uptrend, and the direct uptrend is valid and in play as long as the $1.21 level is holding. For now, zoomed out, you can see that the idea is that the market is moving up in a sequence of 5 waves from the, you could say, the all-time low. The price rallied in wave 1 into the 2013 high, a wave 2 pullback. The third wave is usually the strongest wave from an Elliott wave point of view. Then a fourth wave is a sideways correction, and the fifth wave is likely still unfolding. This is the, let's say, most straightforward pattern that you can identify here on the chart. And the fourth wave that likely bottomed last year seems to have completed as a triangle. A, B, C, D, E. I have not labeled that specifically as a triangle because I want to have space for alternative scenarios. But this is the preferred scenario. And because this could have completed as a triangle, the fifth wave seems to be an impulse to the upside that's unfolding right now. And it seems unfinished because it has not really broken above the third wave high. Also, the move to the upside in that fifth wave should be a 5-wave move itself. And so far, I can only identify 3 waves. That's one scenario. And the question might be, okay, where should the price get to if there is one more high? I mentioned it in previous videos that the $5, $5.65 area, so $5.65 or even $6.62 area, that seems to be an ideal target range if one more high forms. There are other scenarios, but also they actually still allow for the interpretation of higher prices. I mean, nothing is guaranteed in the market. However, still we can track higher prices as long as certain levels hold. As I said, the $1.20 level here is a key Fibonacci support level. Now, in another scenario, the wave 4 did not form a triangle but bottomed here in March 2020. And we could now be moving up in an even more aggressively bullish scenario, a diagonal pattern. But I've only marked that as an alternative scenario. But we have to have it on the radar, okay? Wave 1, wave 2, wave 3. Also, that third wave could get another high, which is why I'm actually quite positive about the chart. That being said, in the short term, we could still go a bit lower. But then, there should be a fourth wave and a fifth wave. These are the two main scenarios I'm tracking. Don't want to talk too much about the red scenario because it's very similar to the previous ones. It also allows short-term for further upside. Looking at the daily chart, if we zoom in a little bit, you can see that we are still tracking here a potential triangle pattern that might break. In previous videos, I highlighted repeatedly the risk that we could visit the $1.55 level or the $1.21 level because there is no clear confirmation for a substantial low. But if we go a little bit lower in this range and we're holding $1.20, it could still be a fourth wave correction. And as long as we're holding $1.20, the overall uptrend remains alive. So the reward to risk ratio for anybody who's looking for a position is getting quite favorable should the market goes a little bit lower in this support region. But obviously, please note that until we really get a little bit of upside momentum or a small upside impulse, there is absolutely no confirmation that a low is formed. So downtrend is still in play in the short term. So looking at the shorter time frame, the patterns we discussed in previous videos, they are still very relevant. The idea is still that this could be an Elliott wave triangle, but yeah, as I said, it will be invalidated with a break below $1.77. Those were the levels communicated in previous videos. In a triangle, we get a lot of up and down movements. We haven't even broken below the 11th of March low. That level will likely be tested next. It's at $1.89. If it doesn't hold, then the triangle C wave will extend. It means that it's still unfolding because the current decline must not break below the low of the C wave in a triangle. But all that would mean is the triangle is extending. But yeah, below $1.77, a move down into that lower support region in a still unfolding fourth wave will be confirmed. But then again, that is the area we can then watch for support. Basically, what it means is below $1.77, the 155 level is the next Fibonacci level to watch, and then $1.21. Yeah? These will be the next levels and where opportunities could come up, actually. At the moment, the price is trying to break here through Fibonacci micro support. I can remove that from the chart. We don't need that micro support area. The price reacted, but as I explained in yesterday's video, it was only a 3-wave rally, so no bottoming confirmation as such. We're now testing the trend line, and we could come down to test the $1.89 level and then possibly $1.77. At this point, it takes a break above $2.23, which is yesterday's high, to suggest a local uptrend has started. So until that level breaks, there is absolutely zero evidence for a low. And yeah, I'm not confident we're going to turn around until I see a first 1-2 setup to the upside that would mark the beginning of wave C. So be careful here, given that also Bitcoin is expected to go a little lower. I would not be surprised if XRP follows the blue count. It had a chance to turn around, so far failed. But even, as I explained in previous updates, yeah, even if the price turns around here, the focus will only shift to the blue zone, and that is only an area of interest. It's not even high probability area to watch, and it's not expected to be a direct breakout. Yeah, expectations would be for this triangle to continue a bit, or even for the wave 4 to reset a little lower. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.